Hey everyone, this is Zaid Hanna with the Hanna Group here at Real Estate 38, and today is January 21st. So what is going on in the real estate market today? Well, I always start with what's active and what's pending. We have a total of 520 actives with 600 pending. So we're still performing. On the most part of 2021, we performed at a higher pending at the same time than there is actives. So we always kind of had between 2 to 3 weeks worth of inventory, and we're still about in line of about 3 weeks worth of inventory. Again, that's very low. That's a seller's market. So let's talk about the key housing updates or takeaways from 2020. Well, the median home price in the Bay Area has gone up 15%. In some cases 20, depending on the neighborhood, but I can't believe the monster year we had with appreciations. If you go back to my prediction in the first week of January, what I did in 2020, I said we will go up the first pretty much 3-4 months. The summertime is going to flatline, and then by the end of the year, we may be a flat or slightly up to end the year by just about 7 to 8%. Well, COVID hit, things changed, and now we actually saw a double that appreciation of the prediction that I had, but still, it's still up. It went up. Everybody's asking how come in the middle of a recession we did not go down. Well, there were some key factors to that. Obviously, by the way, we've been running at lower inventory. We ran at just about 33 to 36, depending on the city, percent lower in inventory year over year. So in 2020, we had about 35% less inventory than 2019. And of course, our pending, we had 35% higher than the year before. That's why we had the 15% appreciation for the year. So what's going to happen in 2020? Well, let's look at what's happening right now. Everybody's predicting, I will predict the same thing. It's going to be a banner year. It's going to be another great year for housing. Here's why. Low inventory is controlling the market. Baby boom generation is not moving. They're the wealthiest generation alive. They own their homes free and clear. They don't have to move. They would like to move, and nobody's jumping in that airplane to go do their homework to whatever city or state they are moving to. So we've been seeing 35 less inventory due to that, due to the pandemic. We have some very low interest rates. I can't believe I'm personally refinancing a 2.25 on my existing home. That is unheard of in the low twos. I even heard a client that got 1.99. That is crazy. So higher than usual down payments, meaning the stock market is breaking records. Most of our buyers have their down payment in their companies as RSUs or have invested specifically in NASDAQ. And NASDAQ is going through the roof, right? It's breaking records left and right. So the down payment is very strong. The interest rate is very low. So it's causing that behavior in buyers to have the confidence to buy a home, even though it's gone up $200,000. It doesn't matter. Their monthly payment year over year still looks the same. And that's what the outcome is. We're still running at a very low new construction. So what you see is what you get. So the seller has to sell it for the next buyer to buy it. We are not producing new inventory in the market. And the most important piece is the millennial generation is becoming of age where they're becoming more financially stable and powerful to start buying homes, and we simply don't have inventory for them. So my prediction for 2021, I think we're going to go up by about 10% by the end of the year. The first 1 to 2 quarters will go up. We'll have some healthy growths. In the summertime, we may see the peak of the inventory because maybe the vaccine will be out in full effect. Summertime, the cases will go down. People will feel more confident. The country will open again. So people may travel more. So we'll see more inventory. I'm praying to all the gods out there to have more inventory because the demand is still very powerful. And I think the last quarter with the holidays, as we always do here in the Bay Area, we still go up in prices because the inventory drops after Labor Day. So with that being said, if you have any specific information or data, or if you have any concerns about the market, feel free to reach out to me. Call me, 408-515-1613, and I'll be happy to give you more data about what's happening here in the Bay Area housing. Bye-bye now.